The U.S. Treasury Secretary Scott Bessent recently said this about the economy. He said there's going to be a detox period. Time to sober the F up, everybody. That quote got packaged up and, well, the first part of it anyway, got packaged up and started making the rounds around social media, making a lot of people sit up and ask, well, WTF is a detox period for the economy, dude. And if you're holding crypto, you're holding stocks, well, what does it mean for your bags and where can we go from here? Today, we're going to unpack exactly what a detox for the economy is going to look like, what it might bring for the markets, especially for cryptocurrency markets, and how to approach this major change in the government's economic thinking, both short-term and long-term. So first, let's focus on what exactly Bessent was talking about. Politicians like to use flowery language and metaphors, so we get a phrase like detox period applied to the economy. But let's look at the longer quote outside of just the soundbite.
Top 10% of Americans are 40 or 50% of consumption, and that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down, and could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
You can see that Bessent said a couple of key things. He said, first, there's going to be a natural adjustment as we move away from public spending into private spending. And then after that, he said, the market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period. So first, Bessent makes it clear, of course, that the new administration's aim is to re-privatize the economy. And in fact, that's exactly what Bessent also posted over on X when he was saying the re-privatization of the American economy is just beginning. February's jobs report showed that 93% of the jobs that were created in the private sector. Most of those jobs went to Americans, not immigrants. And of course, this also links up directly with Elon Musk's Department of Government Efficiency, which of course is picking up an absolute shit ton of flack right now as it goes full speed at the dirty swamp and reduces a lot of government waste and spending. Okay, it's auditing the government, it's auditing the spending, it's finding so much bullshit, slicing away any hint of what it sees as waste or corruption. And it's doing this all in full view, as it hopes at least it keeps the majority of the public on board as they keep finding ridiculous fraud and waste, so the other politicians can fume all they want about it, and the public is on board with this. And this all brings us to Bessent's assessment that the market and the economy are junkies for government spending. And so this move away from that and towards private sector spending instead amounts to something like a government-prescribed detox, with the toxins in question being, according to the Trump administration anyway, out of control and unsustainable public spending. That needs to be taken out of the system. So the next question is, what does this mean for the markets? Well, before we get into that, a real quick shout out, guys. I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs, and currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account, and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Okay, now let's get back to it. Because of all this, we're now in a period of uncertainty, anxiety in the stock market. You probably noticed everyone's freaking the fuck out, man. Further added to by the ongoing drama around the trade wars and the tariffs, a story that seems to switch on almost daily basis. They're on again, they're off again, they're up again. This guy's doing tariffs, that guy's doing tariffs. Means volatility on the charts should be expected to result in further de-risking. Was this the big de-risk event the other day? I guess we'll find out. After all, who right now wants to come along and act as an incremental buyer for risk assets when everyone else is already fully loaded up on these same assets? In fact, they want to get out because they're afraid. Here's someone else's exit liquidity. As for timescales, Bessent stated in a recent Bloomberg interview that in agreement with Trump's own estimate, it will become Trump's economy in 6 to 12 months. That's a while to wait. Second half of the year, look for much better times. And of course, the admin will want to have the economy on track and markets fully fired up well in time for the next election cycle. Also, as far back as last October, Elon Musk responded in the affirmative to predictions about exactly what's playing out right now, agreeing with statements that the market will tumble. But then, when the storm passes and everyone realizes that the economy's on much sounder footing, there will be a rapid recovery to a much healthier and more sustainable economy than, higher prices for your Bitcoin and stock market stuff. Coming back to the present, Trump recently said the following: there could be a little disruption. You can't really watch the stock market. If you look at the price of stocks, well, anyway, he said, look at China. They have a 100-year perspective. We go by quarters. So what we're doing is we're building a tremendous foundation for the future. So again, it's a controlled demolition that we're watching here so they can rebuild better. Tells us clearly where Trump's head is at and where his priorities lie right now, not on short-term stock prices, but on fixing the economy fundamentally so that everything can go much higher later without these underlying massive illnesses in the economy. Basically, de-risking means, of course, Bitcoin takes a hit, stocks take a hit. I mean, Solana, Ethereum down 50+%, Nvidia stocks down, Tesla's down 50%. But this stuff will all lead the way when risk on switches back over. And Bitcoin, of course, takes an immediate hit. Then alts take even bigger hits. As for meme coins, well, most of those are pretty much absolutely slaughtered right now. But this doesn't mean that the cycle is over. In fact, it's debatable whether Bitcoin cycles of old are even still really relevant at all. Maybe the 4-year model finally is truly broken. Be crazy, right? Remember also that Bitcoin has several huge long-term positive catalysts on its side right now, the latest of which is the US government forming a strategic Bitcoin reserve. Apparently China might be doing it, Brazil might be doing it. I mean, just, 3 of the top 10 economies in the world launching Bitcoin reserves, probably nothing. The USA will be buying Bitcoin, despite what you might have heard. They're going to be developing budget-neutral strategies for acquiring Bitcoin, like selling gold, special drawing rights, maybe drawing down some of their $4.5 billion cheese reserve. Yes, they have a cheese reserve. All this means there's no rush. But it makes sense to be ready to dollar cost average into good assets on major dips, with Bitcoin itself always an obvious play at lows. Well, when it comes to alts, you need to be very selective. Pick coins with strong potential, not the things on the farthest end of the risk spectrum. That means staying locked into what's happening in the crypto markets, no matter what crypto is doing, being ready to trade the markets, sell relief rallies, that kind of stuff. So you know which coins are holding up the best, which have solid communities, which are actively building, which look at the best potential for recovery. And it's worth looking out too for specific niches that might outperform in the way that meme coins and AI tokens took off last year, because it will absolutely happen again. Maybe those same niches will come back in their own way. Maybe we'll have new niches coming. Basically, then you can start to look for opportunities in the turbulence. And so that detox metaphor gives a pretty clear indicator of what's to come and what is happening right now. Think about a regular health-related detox. You cut out the fatty foods, you quit the alcohol, you stop smoking, okay, maybe ramp up the exercise a little bit, and it might be a shock to the system, but when you come out the other end, you're in way better shape than you were before, right? Or in other words, you're looking at short-term pain for long-term gain. Those are the words of the week, aren't they? And from a crypto point of view, the glass half full perspective here is that there may be some great buying opportunities coming down the line, because while this recent sell-off has been pretty brutal, it doesn't mean that we can't see lower prices in coming weeks or months. We shall see. Global M2 should, in theory, be picking up by the end of March, start of April, but let's see. If Trump keeps aggressive pressure on scaring everybody in the markets, then it might derail to an extent or slow down the impact of that rise of global liquidity. And just remember, crypto, it's all about volatility, baby. And the best risk-return ratios can be formed and found after prices get absolutely hammered, as long as there's reason to expect that conditions in the future will improve and you can remain solvent longer than the markets can remain irrational. These are the exact moments to be ready with dry powder. So as I said before, there's probably no big rush right now. A V-shaped recovery is not the most likely scenario, although it could happen. News could break tomorrow, the war in Ukraine ends, and inflation goes massively down, and the Fed's going to cut interest rates next week, and unicorns and rainbows. But those aren't the most likely scenarios. All these things will take longer than you probably expect to resolve. But stay involved in the markets. There will be massive opportunity here. There always is. Thanks for watching.